I think I've never seen in the multiple panels, but never seen such kind of diverse, where every component of the value chain is here. Okay, so I'm sure going to be an insightful discussion. So I think credit card, we all know that still, as compared to the debit card, if you look at it, I think credit card is almost 80 million kind of things, while debit card is almost reaching a billion mark. I was reading, so there were almost like 939 million debit cards already, right, as per the RBI statistic. So that's where going to be focused, that how do we increase that, how do the credit card going to be having a multi-fold kind of the growth, right? What are the things that need to be done? What are the banks are trying to do that to push this growth? So with that, I'll start with Sudipta. So you have been handling this credit card for quite a long time. You have seen this market growing, evolving. At the bank also, you have been anchored multiple initiatives which have pushed the credit card growth in the industry. One of the premier one has been the ICICI Bank and Amazon partnership. So with, as an industry observant, how do you see that? What are the limitations and challenges that need to be taken care for the credit card to grow? Before that also, if you can just throw some insights into how has been journeys of the credit card at the bank, also at the industry level.
Okay, thank you, Shashank, and thank you for inviting me. Yeah, I think I'll start with, the second part of the question is how been the journey for the industry and for the bank. If you look at, and I will focus on the post-global financial crisis between 2008 and 2010, and the industry was sort of rebalancing and reorienting itself between 2010 to 2012-13. And after that, you saw a huge amount of growth. So obviously, we thought that we'll hit 100 million 10 crores very soon. But frankly, that number is going to come a little slower because there's some of the sort of regulatory guidelines that have changed, right, on which the industry has taken that in stride, and industry is trying to reorient and readjust to that very fast. One of the things which is the industry has matured post 2008 and 2010 is basically the delivery of risk algorithms. Now, one of the things you have to understand is that at the end of the day, if you look at banking products, credit cards is actually from a risk perspective the end of the food chain, right? A customer will pay his mortgage, his auto loan, his personal loan, and last of the thing is his credit card in case there is a liquidity issue with the customer. Now, one of the things which we saw during COVID, and COVID was a long tail risk. One of the things that we saw during COVID is that all the issuers, all the large issuers, were actually profitable through COVID. And which actually tells us that the risk algorithms used by the industry has matured over a period of time. And it is possible to run this business with a defined risk sort of band. If you look at the US cards industry, the US cards industry over the last 20 years runs the business within a band of loss rate band of between 1.5% to 3%. And even through COVID, even through global financial crisis, okay, during global financial crisis, we saw the loss rates in US go up to about 4.5% on an average. But after that, for the last 12, 15 years, it has been within the narrow band of 3 to 1.5%. And I do believe that it is also same possible in India to run that. So when your losses become predictable, what you can do is scale up the business very, very fast. And I think what we will see in the next couple of years is a scale up of this business, both on the bank side as well as on the assisted issuing side, sort of scale up very fast, primarily because some of the things that have happened in the happening in the ecosystem is making it data rich. For example, when you went to a bureau, you saw half of the customer. Now, because of the AA ecosystem, if you're able to pull his liabilities data, then actually you're able to create a full 360 of the customer, able to calculate his aggregate debt burden, MEUE, etc., complete to the last third point of decimal. So your risk administration becomes even more tighter, which will allow you to scale up much more faster. And for that, we have the tools, the digital tools. So for me, I'm extremely bullish about this industry. We are at about 70 million or 75 million or 7.5 crore issued cards right now. I wouldn't be surprised in the next 3 to 4 years if this number, we hit 30, 40, 50% growth rates, right? So,
wow,
so I'm very bullish.
Absolutely, I think we're gonna sure. So thanks. So Ram, I'll come back to you. I think Sudipta gave a reference to having the digital tools to also support this scale up. And you have been building very interesting the platforms you have already built, and it's also gone live. on the credit card platforms, right? And with an objective to simplify the journey, simplify the customer experience. How do you see that these tools gonna help the banks or maybe any credit card provider to able to scale by creating that kind of the values that you are intended to do that through your platforms?
Yeah. See, one of the biggest, if you see the cost item to the bank, right, it is about convincing a customer, right? Um, the industry term for this is CAC, right? So that's one big component which actually delays the profitability of a credit card book, right? Now, through the digitization, while of course, let's say a customer comes to a bank property, it could be a website or an app, and then they could completely, the journey can be completed through the app itself, right? But still the CAC is high because how do you get the customers to come to the bank property, right? Now, what big change that we are seeing in the industry is, in fact, the Amazon ICICI partnership is testament to that, right? Which is essentially the embedded banking partnerships. Even for credit cards, we're seeing that co-branded credit cards where e-com companies or fintech companies or wealth tech companies, they come together and they actually create a value proposition for the customer and sell this as a loyalty proposition or yet another product to the customers, right? This way the CAC reduces significantly. And not just that, right? Everything when is delivered digitally to the customer, it reduces the cost of that delivery and increases the engagement and thereby increases the profitability also. Right? For instance, think about collection costs, right? Today, thanks to UPI, collection cost is nearly zero for the customers who are paying on time, right, through these digital channels. So digital drives efficiency, right? And with that, and of course, the other digitization via systems like account aggregators, which offers more insights about the customers, and also embedded banking also brings more data from the co-brands that are participating as well, right? For instance, you can take a look at someone's purchase behavior in a grocery website, and then you can make some sense of that customer, right? That data is still valuable. Like one of the bankers that we spoke with said that, look, if a customer is purchasing gourmet items, then we will take that as a proxy for the income, right? Which is pretty, it gives that insight, right? And I think that is the way forward, right? Digitization and being able to interpret data in different ways and engaging with the customers digitally keeps the cost to a bare minimum and yet at the same time delivers much better services to the customers as well, right? That, in my view, will help grow the industry in a significant way in the coming years.
Thanks, Ram. So Amit, I'll come back to you. I think when it comes to the credit card, I think rewards makes it a very interesting propositions to do more transaction on the credit card. I'm sure everybody loves rewards, right? And you have been building a platforms to reward. How do you see that entire this platforms or maybe first on the rewards, like rewards can be plugged into the credit card value chain and help it to scale. But how do you simplify also to make that customer consume this rewards and then able to do the more transactions, right? And more the transaction, will definitely it's push for more credit card adoption, right?
No, first of all, thank you so much, Shashank, for having us here. And it's very interesting the way, Sudipto and Ram has been talking about the adoption of what next to be done. See, rewards have, instead of looking at it as an acquisition, rewards is for customer engagement and, making sure that there is a loyalty that gets generated, for people to use it more often. However, by design, specifically in India, what we have seen is that by design, these have always been a locked asset. Nobody wants rewards to be absolutely available for users, though people have earned a lot of rewards, but they don't know how many rewards they have, where to use those rewards, because they are so much hidden somewhere for people to even get access to it. So it's because of the design, the way it has been really created, there is not much adoption that keeps happening on the rewards as such. Now, if you carry two plastic cards, one of the major differentiator for every consumer sitting here is rewards. Am I getting better rewards on this card or that card makes the whole difference of which cards I will use today. So this is what we have seen, and primarily what we have also realized is that multiple financial institutions are considering rewards as a cost instead of a revenue, and they also consider breakage as one of the business models, right? Which actually is not. So reward should be able to drive more spends for a consumer. And it can only happen, what we have seen, is if you can make it completely ubiquitous in nature and fungible in nature. So if you have given something to a consumer, let the consumer be able to use it freely. So today the options available to a consumer, on a portal I will probably get a flight ticket, or I will take a voucher, or I might get a cashback from the points that I've got. But those are probably once in a 6-month life cycle of a consumer. But as a customer, I generally, swipe multiple times in a day. So if you're giving me points, if you're letting me earn, why are you not letting me use it, right? On a freely model. So that's what we believe in, that the more ubiquitous you can make it in nature, it will help all the banks, financial institutions, the uptake of the credit cards will start happening if the customers are able to use it also freely and simplify the journey for the consumer.
So thanks, Amit. Pravin, before I come to you, I go to Ardith. So Ardith, I think one of the challenges on the credit card has been seen in the less adoption in the corporate side of the world, right? Maybe the mini startups or fintechs or corporates, SME, MSME, across all the board. We have not seen that credit card adoption in the widely, right, as compared to the retails and all these things. And anyway, I'll come back to the questions to Sudipta also before that. But means Kodo working very deeply into that kind of thing, building the credit card for that this segment. How do you see that adoptions moving, and how do you see that this segment is going to grow to push the credit card to a larger scale?
Sure. Firstly, thank you for having me on this panel. So yeah, I mean, with Kodo, so we mainly focus on Indian businesses and solving for all of their payment needs. And credit cards is one of the major things that we see startups trying to find in the market. And where Kodo really solves for them is typically early stage startups. They don't get credit lines very easily, and it's very tough for underwriting for a typical financial institution to underwrite these companies and give them that. And why they come to us is because we give them a collateral and interest-free credit line of up to 38 days. And also using a payment instrument for any sort of online subscriptions that they have or any other sort of company expenses. And the whole purpose of Kodo that we see of why these early stage startups are adopting us and there's huge potential for them is because we look at it as an area of control for them, where at their fingertips they have all the controls with regards to issuing new corporate cards, with regards to putting spend limits, putting transaction limits, blocking specific transaction channels. So all of these things at their fingertips. So when you see fast-growing companies, they want tools at their fingertips as well, which is very easy for them to control. And yeah, so we are seeing very good adoption and specifically in the startup ecosystem right now.
Thanks. So continue from there. In fact, as one of the startup also, we are trying to get the ICICI corporate card to manage our expenses better. It's not only about that getting the corporate card to manage the working capital, but also it helps you to manage your expenses and all these things better. So how do you see that this adoption into this space where the corporate or mid-size SME, mid-size corporates and all these things, not only using the corporate card, but also for their employees to giving the corporate card and all these things. So how do you see the growth in this segment?
So in commercial cards, I think, and we don't use the word corporate cards anymore, we say commercial cards. So in commercial cards, if you look at the growth that has happened over last 24 months, it's actually been quite massive, right? It has been over 1,000% growth, right? Wow. So though Reserve Bank of India does not publish the data of retail card spends vis-a-vis commercial card spends, but Let me assure you that all the large issuers, together with some of the fintechs, have really sort of exploded this segment, and now this segment is very clearly bifurcated into four large verticals. One is obviously your corporate T&E. The other is what we call the Digitio platform, or basically the insurance platform. One is the bill discounting platform and the accounts receivable platform. And the last one is the statutory payments platform. So these are the four platforms on which now we are seeing very large volumes flowing, right? And to an extent, banks like us also can take larger risks because we have corporate relationships where you can carve out, if you have a line of 100 crores with a corporate which is undrawn, right? It doesn't require us any extra credit approvals to pull out 50 crores from that line. And because we have the balance sheet size, some of the large banks like us are able to deliver this. And this business actually sits between the transaction banking business and the cards business, right? But where it is very effectively run by the cards business. And it is quite remunerative as well. Of late, moving it, now obviously we are taking a viewpoint towards an ecosystem approach, because we believe that when you solution for an ecosystem from a commercial cards perspective, you get far more nuanced use cases, which require certain bespoke builds, but on the long run, it is far, far more sticky. So that is the next sort of envelope to which we are pushing towards. As a bank, we are deeply committed to this sector, and some of the, and I would say we are now pioneers in some of the areas which the others are picking up and replicating.
So do you see quite good growth is continue to, may not be 1000%, but definitely continue to be grow. Yeah.
Yeah, 100% plus growth rates assured.
Okay, great. Now, when you use a credit card, right, you also love the reward and also love chargeback, right? But at the same time, also it brings lots of the dispute. Many times it happens on the dispute side of the, it's not by the correct transaction, I have not done that, or maybe could be related to anything. So Pravin, coming back to you, since you're building a platform which try to simplify this whole chargeback and the dispute management process, how do you see that these two components are critical to the whole process of the credit card, as well as help it the business to grow further, especially creating a value for the lenders to help the create a better value for the customers?
Thank you, Shashank, for having me here. So, when we speak about chargebacks and dispute, it's a problem that everyone faces, right? So, when we get a dispute or we made a false transaction, there is a fraudulent payment, first thing we try to do is just call the customer care, reach them, raise a complaint, and wait for them to forward it to the dispute team. And there is a lot of process behind. So, what we tried as Backspace, how we can engage a customer through banks, like as Twid does, as Hyperface does, how they engage the customers. In the same portal, if they ease them to raise a dispute, where without calling in a customer support or anything, with the predefined questions, where a product can directly capture it and file that in the network itself. So it will ease the overall process of a customer to handle it. And it really helps the customer to get retained, and it is an added value for the banks, and it enhances the profitability access.
Thanks, Pravin. So now, coming back to you, as a technology enabler, right, how do you also try to take care of the customer experience part? Because ultimately it's everything boiled down to the customer experience. Like the nudging part is there, and I was speaking to Ashwarya in other sessions. Like these are like small things to taking any particular actions related to card and all these things. How do you visualize this, like small things that need to be added, which can help the customer experience to grow further, right? So how are your technology solutions going to help that create that kind of the customer experience?
Right. See here, the typical cookie cutter experience is something that that is for us to see, right? That's been done for ages, right? Delivering that efficiently in a mobile interface. What I'm talking about is, suppose, let's say, a bank runs an offer saying that, look, if you go to this coffee shop, you will get 20% discount for your transaction, right? Now this is run at the entire book level, right? The entire customer base will receive this offer, right? Now delivering this, taking this particular thing and then delivering it to the customer is one level of engagement. But being able to, let's say, create 100 such offers, and then being able to position the offers, those that are very relevant to that user base, right? Or you can say, look, at a group level, you can personalize, or at an individual level, personalization will get the customers to use the offers better, right? And thereby the customer will see benefit. In fact, if you see in this in this particular model, right, discovery is also revenue making for the banks as well. If they're able to drive footfalls to the commerce stores, right? If they're able to influence certain purchase behaviors of customers, then that also increases the revenues for the bank as well, right? While at the same time, it also serves a customer's need as well, right? So we look at this engagement as a large spectrum where you've got these broadcast offers that is going to everyone. Then at a group level, you try to customize that, and then at a hyper personalization, right, which is at an individual level, figure out what is going to make sense for this customer. And if you see this, suddenly it becomes a much harder technology problem to solve, right? How do you understand that at this point in time, this customer will benefit from this particular thing, right? Very, very hard problem to solve, right? Then overall, the system also competes. By system, I mean the credit card system also competes for the attention of the customers through certain, when we talk about these nudges, for example, let's say we discover that a person is booking a flight ticket for 50,000 rupees. Now suddenly we can pretty much be sure that the customer is traveling outside India, and you can ask at that time to the customer, hey, listen, we know your credit history, and we can actually offer you an extended limit for your international trip. During the international trip duration, would you like to activate it, right? And you can do this kind of a personalization also. This is the system competing for, let's say, the offers, right? So your attention span of the customer is limited. Now, how do you make very relevant use of that? And all of these can be delivered far more excellently on digital platforms because they are very non-invasive in nature. Like if you call up a customer, as soon as he's booked a flight ticket for 50,000, if you ask him or her that, hey, would you like a credit extension, then they'll actually freak out, right? The same thing, right? What analog is doing, when digital does it, seems far less pernicious to the customer, right? And it could be seen as value add for the customer also. And all of these algorithms are doing, right? So to us, when I see a digital platform exist for engaging with customer, I see this almost as a blank canvas. Now this canvas can be painted the way we want, and that gives us the obviously the efficiency of delivering different services to the customers, and also increases the engagement, and hence overall the NPS also goes high.
Oh, very interesting, Ram. You're talking about the individual level of offers. I tell you my experience, like in one of the card that I've been using. Now I've tried to use an offer on one of the platform, and it prompts a message that okay, this offer is not available on this particular card number. Okay, so that's kind of the, and then you get disappointed, right?
Yeah, that is right. That is right. That happens quite a lot, right?
Yeah.
Another experience, one of our partners was saying that, hey, there's this bank which offers booking at this fantastic 5-star hotel if you actually spend, say, 2 lakh rupees, right? But that voucher is sent on an email. It is not sent on the digital interface, right, on the mobile app. So what happens is that email gets drowned out. Google probably marks it as spam, or it puts in the promotions tab, and then it's buried down, right? And it's a limited time voucher. It's only valid for 6 months or 1 year, right? And you've got to use it before that, right? Now this overall experience, then this leaves a bad taste in the mouth of the customer, right? I did get the voucher, but I did not use it, and hence it seems like a loss from the customer's point of view, right?
Yeah, thanks. So I think, so I'll continue, Amit comes to you. So what are the transformations that do you see into that space, not on the offers only, but the reward space also, like that can happen, that need to happen because you're building the platforms. What are the transformations that you see to happen in the near future? Or maybe you are building?
So what we are seeing is that the consumer behavior needs to be, you know, as Ram also mentioned, right? The consumer behavior needs to be influenced, and it can only be influenced once you understand the customer journey really well, right? So The customer just had a cup of coffee and now going for fueling the car and then buying groceries, etc., etc. Now, if you can pre-help the customer to make decisions and give them some sort of an offer or help them with rewards that, if you do this, you will get that. Maybe that could one way we have seen, influencing the behavior of the customer. So let's say if my customer has just gone to Ixigo and used their reward points, we also know there are complementary stuff that the customer would have done in the past, and hence there is a next taxi booking that he is expected to do. So that offer immediately goes to the consumer that here is an offer that you can use, and here are some reward points that you have got from various places, so you can use that completely. From the perspective of what we are also doing in the ecosystem is just that we are now at the checkout itself on all the top merchants in India. So rewards are, without you linking any of your loyalty card number or a credit card number, etc., to fetch your balance, the consumer is right at the checkout, which is the moment of truth, and he automatically discovers that I've got various points that I can use, and that's a delight to the consumer right then and there, that that's mine, and you have given me access to it, and now I am able to use it, and I'm able to save some money on every transaction. That's a big delight on India, right? I mean, India loves saving.
No, that's absolutely, absolutely. I think. Thanks. Now I'll bring that entire focus on the another very critical component, and with come to Sudipta. Now, Sudipta, you already brought that point that lots of the regulatory guidelines has come in the last couple of years, which is will have definitely influence on the credit card, like be it on the credit card and debit card regulations or the co-branding, and also now the new mandates coming on to adding the credit card on the UPI, UPI on the credit card. How do you see these regulations and some of this component of like UPI on the credit card will also influence that adoptions and the growth of the credit card?
See, what we have to always remember that regulation is always for the better. In the short term, it might create you a little bit of pain, but on the long run, it's for the more predictable functioning of the ecosystem and plugging sort of any inconsistencies that there are during. And always you have to remember that it is also, regulation is also about protecting consumers, right? So, and I do believe that whenever a regulation is coming, we should always take it in positive light and then try to be compliant with that. So, some of the regulations, yes, they have had taken a little bit of the tech bandwidth from other developmental projects away from many banks to be compliant. But we do believe that it's a one-time exercise, and that makes the system far, far more stronger. And it also sort of pushes the business teams in the banks to be far more agile, right, and far more focused on outcome. I'll give you an example. Before the activation guideline came in, wherein said that, on 37th day, if the customer is not activated, you have to close the card. The average industry activation, 6 months activation rates used to vary between, 55 to 60% at max, right? 40% of the cards used to be, inactive, out of that 25% used to be NUNP. Now, because of this particular guideline, there is so much of focus from the banks in trying to make sure that the customer actually gives a positive consent for activation before the 37th day. You see the 30-day activation rates actually shooting, right, which never used to be the case. So, on one hand, you might say, oh, this is a very tough regulation. On the other hand, if you see the positive outcome on the other side, right, it's a completely different way of looking at things. So, obviously, when a new regulation comes, people grumble and people take time to get adjusted to it, but after some time, it becomes par for course. So, we shouldn't react too much on it and make sure that we go with the flow and look at the positive side of it. On your question on UPI, I think the linkage of UPI to RuPay credit right now, right, is, I think, another watershed moment that is like happening right now with deep ending ramifications, right? Because what has happened is over the last 5 years, the process of using a QR, and I always used to maintain that, I have a doctrine, right, saying that whatever takes more than 20 seconds to pay at point of sale will not scale. The UPI QR, and because of the speed of execution and because of the speed of the response of the tech stacks of some of the some of the UPI facilitators like Google Pay or Phone Pay actually brought the entire QR experience below that 20-second threshold, and that's why it's scaled. Now that you're using a UPI QR at point of sale has become almost like muscle memory. Moment Rupee on credit becomes far more mainstream, you will see customers shift from the normal UPI on through their account to UPI on credit. That will funnel a lot of volumes to credit. And why so? Because for a rational customer, spending on debit is 0 rewards, spending on credit is X rewards. It's a no-brainer. So volumes will shift. And let me assure you that banks will push the volume shift. Because what is happening is that the large amount of the P2M transactions that we see is non-revenue generating for the banks. This is an opportunity to plow back a torrent of revenues, and I'm choosing my word carefully, a torrent of revenues into the payments industry, and both for the third-party apps as well as for the banks. So this is a excellent move. Things will start moving very fast, and we'll be very surprised with the success of this entire lift off about 12 to 18 months down the line. And let me tell you that though it is starting with Rupee, UPI on credit, the other networks are also looking at it, and you might see soon a good amount of competition on the ground on competing QR forms. So overall, the customer will gain.
Thanks. I think it's a pretty, what do you say, positive future that we are looking at it. Maybe Ardith, you would like to add anything onto that? So what kind of impact that you see on the corporate side of the card?
Sure. So with us also, we anyway provide UPI payments for Indian corporates today. But that's more on a virtual account basis where they load the money and then they transact over there. And so we have customers on both ends, which are customers who are transacting on UPI and customers who are transacting on credit card. And this use case has come up of why can't we use, let's say, a credit line or a card linked to UPI for payments as well. So definitely we will be seeing quite a bit of adoption for existing credit card customers, enabling, let's say, employees who are doing like petty cash expenses or something else for UPI on credit. And on the other side as well, whichever customers we have currently for just, let's say, UPI payments who are not yet using our credit cards, we can look at them also starting to utilize the credit cards maybe first for a UPI scenario and then using it for other use cases as well. So it's a cross advantage and a cross selling for us.
Thanks, Ardith. Before I go for any other questions, any questions from the audience, keeping in the context of the time, happy to pick it up. So meanwhile, people get their questions, I'll continue the discussion. So one of the things also, now the challenges side, the BNPL which came and right, actually kind of taken as a kind of a good adoption. Now the regulatory framework has still to evolve. And many times, so because people have been making a statement, the BNPL may kill the credit card, but I don't think it's a far from truth kind of things. But do you see that how BNPL will have a kind of any challenge to the growth of the credit card? Meanwhile, guys, any question, be get ready and yeah.
See, yeah, I heard these statements that BNPL will credit card, etc. But what you have to understand is that the uniqueness of credit card as a product is it's a payment product plus a lending product combined, right? There is no other parallel in the banking world, right? So, and credit cards in a sense is a BNPL product itself, right? You're buying now and paying later, right? And taking the free credit on that. I think there exists scope in the market for all forms of lending, all forms of affordability solutions. Some amount of the affordability solutions can come through credit cards. Some amount of the affordability solutions will come through BNPL. Still, credit cards in India is still a, I would call a prime product. It's not a subprime product. Whereas if you look at the likes, the real volume BNPL, or the real volume financing that goes on is actually more toward the subprime side. So the markets are different, right? Some amount of the EMI that you see on credit cards, etc., those are like affordability solutions which come on the way. But the real volume BNPL is still subprime or near prime. So different markets, both will exist, and as the country moves at a 6.5%, 7%, hopefully 8% growth trajectory, all boats will lift.
Thanks, sir. Any question? Yeah, Ashwari.
So Deepto, thanks a lot for the enthusiasm that you showed for the UPI on credit card. I have a question around that, and as you rightly said in the previous session in your question, right, in terms of commercials, right, I mean, somewhere UPI hasn't really had a price discovery there. Now you bring in the aspect of lending to it, right, especially for a large issuer like you. UPI on CC could do to subprime lending, right, what even a pay later is doing, and it could be, like you said, a big boom. But how do you think the pricing of UPI would work? Or, I mean, these two have to go in tandem for a bank to find economics, so would love to hear your thoughts.
Sorry, the last part I missed. There was a sound issue. Can you?
No, I'm saying so UPI on CC might scale and you might get a whole lot of subprime customers coming in. But how the commercials of UPI underlying plays out? Because for a long time, issuers have enjoyed the interchange economics and credit cards. So what are your thoughts on that, considering UPI is a regulatorily priced product?
See, UPI on credit for an initial, what our NPCI says that UPI on credit, especially on rupee for the initial part, is parity pricing with existing pricing, right? So that makes it very attractive, and there are laid out shares of the interchange together with the third-party apps as well, right? So on a whole, if you understand that the large amount of the costs that the banking industry takes in making sure the 99% or 99.9% uptime that we have to maintain on our EPI systems is a large cost, right? Though there have been, subsidies from the government on below 2,000 rupees transactions, but frankly, that does not cover for the whole cost that we incur. And let me tell you, for example, right now we are talking about upgrading our systems from 200 TPS to 500 TPS. You can understand maintaining a 500 TPS system, tier 1 system, what an amount of humongous amount of IT costs that we carry. The reason why we are bullish on RuPay on UPI on RuPay credit is primarily because of the fact that if you are able to move a part of the P2M volumes, which is currently zero revenue earning, to this channel, it will generate revenues for the banks, it will generate revenue for the third-party app operators, and it will flow some revenue into the industry that is doing this massive heavy lifting, but really not getting anything in return. So at least, we will now get the power to turn the lights on, right? So in a way, I do believe that there will be large amount of push from the financial institutions and as well as from the third-party apps to make sure that the UI UX and the incentive for the customer by giving rewards, cashbacks, etc., to migrate to UPI on credit will be quite robust as soon as the tech stacks become coming live, and all the tech stacks are coming live in quick succession, and then it will start snowballing. So to answer your question, yes, it will bring in some see again, whether it brings in subprime customers or prime customers is a separate question, because finally it's a question of how you underwrite. Now you might want to give a credit line on RuPay worth 10,000 rupees also, and you might say, this is a credit card, but a digital credit card with no physical plastic. It's only for usage point of sale. So models will evolve, cost structures will evolve, right? So I do not want to get ahead of myself in trying to crystal ball glaze as to what will happen. The only thing that I can assure you that the next 18 to 24 months will be very exciting.
Thank you.
Thanks, Aditya. Any other question? Yeah, there's one question.
Hi everyone, this is Vamshi from Polygon Technology. I have a very common question that every credit card holder, they are holding a credit card. If suppose they are not able to pay the next month installment or something like that, they miss the payment. Still, the common man or educated person, even today, they are not able to understand what is the logics behind the charges, what they are charging. If you solve this problem, there is a multifold growth for the credit card. If this is not going to solve, definitely there is a decline of using the credit card. Why I am saying this is, even myself and many of my colleagues and friends, they have faced the same challenge. Like, they have limited their credit cards now only to one. That is for emergency purposes. So how you are going to solve this? Are you, the credit card companies are going to solve, or are the fintechs we need to think about and bring a solution for that? For everyone, it's for everyone. Any country can take up.
Technology solution can help it to solve?
Yeah, see, I think the fintechs are solving it, right? Like we saw the explosive growth of cred, which built a very fantastic reminder system to help customers understand, right? See, this is what digitization will aim to solve, right? 20 years ago, 10 years ago, it was not possible for the lending institutions also to communicate this very effectively, right? But through the mobile interface, now that the engagement levels of customers have increased, even this will increase, right? The ability for financial institutions to collect on time, to notify customers about the interest rates that they would incur if they do not pay, right? That would set in. And in fact, if you see the data, the recent data has shown that this is available publicly published by SBI. The revolve rates have actually come down, right? Now, accidental revolve or intentional revolve, we don't know, but even that overall has actually come down, right? And EMIs have increased. I think that is an indicator, a leading indicator of customers understanding how to use their credit cards better, which is what the main problem is, right? It's a good instrument, but it's a very powerful instrument, but it can also create a very potentially troubling phase for the customers if they are not disciplined with it, right? But the modern tools, I am very confident that they are gunning to solve this problem.
Thanks, Ram. So I think it was pretty insightful discussions, and it's shown that at least the positive outlook for the industry, and definitely we are going to see the multifold growth in this industry. With that, I thank all the panelists for taking out time and being with us. Thank you very much. Yeah, thank you.